Hi, everybody. Yeah, let's take a look at the markets in terms of SPY on the daily chart, and specifically look at market breadth as well as something else. Basically, I wanted to identify like the importance of climaxes and etc. All right, so the way you do this, you just get a price volume chart of the SPY, not the ES, the SPY. Why? Because the climactic movement, in my opinion, is more easier to see on the SPY than the ES, and I'm gonna show that. So we'll just take a look at the prior to climaxes, and the other thing is when I say climaxes, there are two types. There's the buying and selling climaxes, but those are they tell you the trend is dying or like ending, all right. But the other one is the minor climax that terminates the swings. So we'll take a look at some of that. All right. So I have a zigzag on the SPY on the left hand side and the right hand side. I'm always taking a look at market breadth. Why? It is, in my opinion, it is required if you're on the daily chart trading or looking at turning points on higher time frames like the daily. You need a market breadth indicator. It will give you very clear, very, very clear, clear enough to trade, all right? So first, I'll just show you that, and then I'll go into all the trends and all that. All right, I'll give an example right here. All right, so this was a low. You'll see, I'll catch the highs and lows using this as well. First of all, understand this. The indexes are a function of their individual components. This is a fact, right? It's not like oil, which doesn't have any components, or gold or any other market. The indexes are a composite. So that means you can get statistics or data on the 500 stocks of the S&P, or the was it like 2,000 plus stocks on the NICE, and the Nasdaq, not the Nasdaq 100, but the Nasdaq overall composite. Even on the Nasdaq 100, there should be their internals. But the idea here is that you have this data that's telling you information about the internals, or the 500 stocks of the S&P, and you can do a lot with that. You can see, okay, is there more going up versus going down, things like that. Some basic stuff. But anyway, let's take a look at how the internals fared on the daily. I'll just pick a random point, just pick this high, right? So just go here on that high. So we see that the SPY pulled back right here. Well, before I even go there, I want to talk about the climaxes. So the number I have here in the candle will tell you that this is the biggest volume in, for example, here 17 means 17 bars. If this was 100, it would be the biggest volume in 100 bars. If this was, I don't know, 29, it's the biggest volume in 29 bars. All right? Or like 29 days, or 29 red candle, green candle, etc. All right? So what the important thing here is, you see here you have 102 million, 102 million, I think. Yeah, 102 million shares traded right at the high. That is your minor climax, minor buying climax, or whatever, that terminated the swing, but in this case, the trend as well. After that, you had a pullback. Now you're going to notice that this pullback on the SPY makes a higher low, right? It has a climax, a minor climax, and it pulls back. When it pulls back, though, it makes a higher low. Now, what do you read on the internals on the NASDAQ as well as the New York Stock Exchange? The NASDAQ has the biggest selling wave in 6 waves, and the NICE has the biggest selling wave, participating 1,789 stocks, and biggest selling wave in 17 waves. This is what you call, oh shit, right there, because the market's going to go down. This looks like a higher low. If you're just do price action, whatever, you say, oh, okay, this is a rally, this is a pullback, a higher low. But this is a lower low and 6 biggest selling wave in 6 on the NASDAQ, biggest selling wave in 17. So I know something's off. Something's totally off. Then when it pulls back, it's the smallest. Oh, I forgot to put the. Okay, let me put the stat. 1 second. Okay, I'll put the stat on it now. So now when it pulls back, it's the smallest wave in 49 waves on the NASDAQ, and the NYSE, same thing, smallest wave. So what do you have? You have, I mean, you could call it imbalance, you could call it whatever, but you have strength plus weakness. That's what it is. Strength in supply plus weakness in demand. Strength in supply plus weakness in demand. The market is on a springboard to go down. Directional turning points always have this. They have what's called a springboard, and if you want to know what a springboard is, basically strength plus weakness. That's all it is. We just need to measure it, and I know how to measure it. So over here, you have biggest selling in 17 waves, smallest. Biggest selling pressure 17 waves, smallest demand in 49 waves. That's not evident in the SPY, it's not evident in the S&P, but it's evident in the market breadth. Bingo. What happens? This shit happens. Now you're going to see again what the market breadth unveils. So on this shitty wave on the SPY, right, where it just looks like a little bounce, right? Oh yeah, just bounce a little bit, look like a bear flag, all that garbage, right? This has the biggest buying wave in 22 waves, and on the NASDAQ, the biggest buying wave in 21 waves. Aha! So it's not apparent on the daily chart, but it's apparent in market breadth. That's why, as a Wyckoff, well, Wyckoff didn't have this. What he did was he started tallying all these stocks and seeing which one was in position 1, 2, 3, 4. So he would basically, at this time, he would look at his position sheet and notice, holy shit, you know, all of these stocks are rallying, right? But you could just get a statistic that tells you, okay, there's a rally, you know, like a stat. He had to do it more manually back then, but we don't have to do that now. All right, so here on this shitty wave right here, where you had the little bounce, it was the biggest buying in 21 waves and the biggest buying in 22 waves on the NASDAQ and New York Stock Exchange. Now we observe this pullback here. On this pullback here, nothing really evident, but on the pullback afterwards, it's the smallest pullback in 5 waves and the smallest pullback in 49 waves. Game over for the Bears. Right there. It's going to shoot up. And look what happens. So market breadth tells you down and tells you up. All right. This is why, folks, stay away from all that bullshit they teach you online with, oh, you know, the trend line and the schematic, phase A, B, C, D. You don't know what's A, B, C, or D. Trying to piece it together is can only be done in hindsight, to be honest. All right. So now you're in an uptrend after the buying. Basically, market goes in springboard, and now it's going to go up. So now it's going up. All right. Now we'll catch it again. Right here. Right. It goes all the way up. Now, what are you going to notice about this top? This top right here. What's the number here? 30 and 58. Do you think that's a trivial amount? Is it a 1 or 2 or a 3? No, it's 30 and 58. That's the biggest volume in 30. I think it's 30. Can't find my what I did. Oh no, right there. Okay, so that's the biggest in 30 up. Yeah, up bars. That's the biggest in 30 up bars. And here is the biggest in 58 total bars. So this is the biggest volume in 30 green candles. And this is the biggest volume in 58 green as well as red candles combined. So basically the biggest volume in 58 candles. Right there. There's your climax. There's the data. There's the climax. That's your climax. That's a change of behavior. Green is your climax, buying climax, or minor climax, a terminated swing, and 58 is your is your change of behavior. Now you're going to see the bounce as well. Watch. Goes down, 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 right there. The 92 here. This was the biggest. No, that's not right. Somewhere here. Maybe it was this. I don't know where it is. But somewhere here, was this? Anyway, the volume goes up right here. All right, that's where the volume goes up. It's bigger than the last 3 bars, and they're basically climax and setting up the bounce. All right, so here you have your buying climax, change behavior. Now, what I really want to get at is this wave. What do you have? See that selling pressure? That's the biggest selling in 9 waves. And I think the market is making a high, but I don't see. Okay, so the way to interpret this is you have the selling and all of that, right? At least it came in on the NASDAQ. It didn't come in on the NYSE. It's 1255. If it was a little bit more, because here you had heavy selling here, but this is like the heaviest selling in 4 waves. I want a little bit more. All right. Here you have the heaviest selling in 9 waves on the NASDAQ. So someone's taking something off in the NASDAQ. Now here's the thing. What you're looking for is a springboard. If there's no springboard, there's no turn. So the selling is baked in here, at least on the NASDAQ, not on the NYSE, so it's not really confirming the way I would like it to. I want both of them confirming just like they confirmed here and initiated the up move, this whole up move. But here you only have 1, and I still need to see a springboard. So we'll see how high this wave goes. Right now, you have selling, but the buyers are still strong. See this? I mean, you have 1,500 down, but you still have this 915 up. You still have this 991 up. So that's a little too much. So we need to pull back and then retest and have a low number for this to puke and go back down. All right. So anyway, to make a long story short, I know everyone's looking at this ES and SPY and all that, but you got to look at market breadth. If you're looking at the daily chart, you have to look at those market breadth that give you a statistic on the the entire market of like whatever 500 stocks or 2,000 plus stocks on the NASDAQ Composite or the NYSE or whatever, and then put on your framework for gauging buying and selling. One very easy one is obviously the wave chart, right? You just put the zigzag and label it, and it will give you the numbers. So it's really straightforward. Anyway, so what's the point of this study? The point of the study is answering where the climaxes that turn the market. And the buying climax is right here on 30 and 58 was the buying climax and the change of behavior that initiated the down move. These are minor climaxes. I haven't really totaled all the volume on the wave volume to see if this is a buying climax for the entire trend. I haven't done that. I don't want to do that because I don't really need to do that. There's too many indicators already. So this is how the turn. There was a turn here as well, but you saw the 92 spike right here. That was telling you that the buyers are coming in, and they did, and then it reversed. The second point is, the first point is climaxes and minor climaxes. Second point is use a market breadth indicator to help gauge and confirm what you may or may not see on the ES and the SPY. So you can see as the stocks what are they doing? Are there more that are going up, Are there more that are going down? If there's a lot going down, how much is it in comparison to the past? For example, this wave, you have 1502, which is the biggest since the low. 1502 is the biggest selling since all the way back near the low, or since the start of the trend, since the start of the uptrend. Right? I take care, and again, if go learn Wyckoff and pay attention to the price and the volume. The volume, I know I've heard some Wyckoff traders say you don't need to include volume. That's because they don't know how to read it. That's what it is. It is the only edge you have to identify if demand is coming in or if supply is coming in. There's no point. You cannot detect supply and demand at different price levels without seeing the amount of volume that came in at those levels. You have no idea if smart money is buying or selling at those levels without the volume. You're literally at the mercy of a candle. Oh, is it an outside key reversal? Did it break the trend line? Did it go to a MA? You don't have any proof that buyers bought at this low or buyers are buying the pullback. You have no proof without volume. Anyway, take care. Bye.